Alright guys, so it's the second day. We are down in the red on Tesla. About yeah, a little over 2%, $2 in the red. That's okay. We have conviction in the stock, but we are looking for the next trade. So I was actually thinking about Merck going short this stock. You see we have had this bear divergence of the RSI back in December, and it just has gone parabolic after that. So now it's consolidated and it seems like it is kind of like dropping off a little bit momentum here. So I'll just go short, try to take profit around 215, that area. So let's just do that trade now. It's not often I do this kind of stuff, so I'll put a stop loss about, let me just see here. So we have, let's say 4% down, so I'll put a stop loss about 2% up. It's about 121. I'll put a stop loss, so we have a 2-to-1 ratio on that trade. So let me see if I can find Merck. So first, let's just see on the analyst charts here. You can see that the average analyst price target is 127. It's not trading at 118, so we still have a little upside based on the targets there, but the price momentum just, yeah, I don't know, don't really have high conviction, but let's just go on with that trade. Let me see. So I'll just do 80 and we go short. See, the spread is 38 basis points. That's pretty high. But still, we did it. We went short, and just let's see how that goes. Yeah, so that's it for now. Thank you guys. Catch you on the next one. Well, hello. I just realized that I forgot to put the stop loss trade on, so I'll just show you how that's done. So this is my portfolio. So you see my Tesla position and the Merck position. So we're still in the red, but let's just see how it goes. So I just need to have the stop loss here. So let's just see that we had it on 121. Just type in 121, the amount. So that means that we will have a significant, or let's say that we will have a risk of 181. That's okay. That's within our comfort zone. So that's 181 out of 5,000. So 1.81 or 1.85. Sorry, 85 divided by 5,000. So that's like a 0.037%, and we said we would maximum risk 1% of our portfolio. So that's $50. So we are way within that limit. So let's just put that stop loss in, and then we'll take profit at let me see, what is this, like 114. Take profit at amount of the rate 114. Yeah, we have to have it a little bit higher. So see, the stop loss is 2.31. we need to have 2-to-1 ratio. So 2.31 times 2, 4.62%. So we just need to take the stop loss down because we're short stock. So we need to 4.6 1.6, yeah. Okay, so that's where take profit. Let's just round it off. I like round numbers. So that's how we do it. So now you can see that we have a stop loss set at 121. The stock is now currently at 118. So if it goes, so as you can see here, guys, so we're currently here. So if it goes up to 121, then we will lose because we're short. So we'll cover here in case it just goes parabolic. And if it goes down, the 2-to-1 ratio down to 113, then we will take profit. So I think this is pretty high conviction, or not high conviction, but we had a bearish divergence here back in December, and then you can see it's very overbought. To see the RSI is actually at 83. So you can see the number on the left hand side there. So everything above 70 is generally considered high or overbought. So now we're way above that. So based on these indicators and also the very extension from the 20 EMA, that means that I feel like the stock price in general, they move like a rubber band. So all those moving averages at some point they should, you know, be touched by the stock price. So now we are extremely overextended. So you can see in the past, for example, here, so the blue line is the 20 EMA, the green line is the 50, and what you can see here is that it has always in the past touched one of those EMAs. So back, let's say, let's go back to early 2022. So you can see that stock price goes down, it touches all the EMAs, touches at least the blue here, touches the green. So every time you see that it gets overextended, it touches the blue at some point. And if it gets very overextended, it touches the green, it goes down to the 100, and sometimes also the 200, which is the red one. So the orange one is the 100 EMA. So as you can see, the stock prices moves up and down. It's cyclical, so it doesn't go up in a straight line. It needs to, how can I say, kind of breathe, or at least, you know, that's a healthy move. So this kind of very vertical move, it's not sustainable in the long run. So you can see we had something similar back in November 22, 1 year ago, but at least at some point it touched the 20 EMA. So that's what I'm hoping for now. It touches down on the 20 EMA at least, or maybe even go below, but we'll take profit, 2-for-1 ratio. This setup I'm comfortable with, so let's just go with that trade. Let's see, I'll never add any more, even if it goes higher. I'll just leave it with this one trade, just $80, and just see how it goes. If I get more comfortable with identifying stop or short positions, then maybe I'll have higher conviction and add more dollars to the trade. But for now, this is how it goes. So back to my portfolio, we are still in the red. Yeah, so you can see the portfolio value is now $5,004. We started off with roughly $5,006, so we're down to $2. Yeah. So that's it, guys. Catch you on the next one.